Alright, hello. And today we're going to look at the VIX index. So let's get right down to it. My charting and trading software, I have candles all the way to 2005, October 2005, all the way to today. And let's start and see what we had back in the days. The VIX is very interesting because it has a lot of noise. And you can see it right here. Let's say we go back here. There we go. And if somebody would want to play the VIX on weekly candles, well, a lot of whipsaws, and on daily. All these candles, this is what I call noise. If I would have zoomed in on the daily, on the weekly, this could have been all a bunch of false breakouts and less probable breakout signals, and most of the time retraces back to under that resistance or that resistance line. Let's see what happened. It seems to be, here's another top. Oh, I'll move my candle. My top to bottom. Let's put the arrow, measure, move, and let's create a parallel line. Did it reach the target? So right now you had this 1, 2, 3, 4, 5 months pattern. You have a breakout candle right here below. Sell stop here, entry here, target all the way down here. And you'll see that 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Oh, almost 1 year. That's a long time. That's why it's important to have those that entry order and attached bracket orders positioned ahead of time. Because in all that time, a whole lot of news. And if you're trading, unless you're a robot, you're probably involved in the news. This, I think, was during the crash. Crazy stuff, right? So emotionally, might not have slept, even if it was trending towards your direction. Even this one candle moving all the way up could have stressed you out. You could have decided to get out of the trade. That's why you have risk and money management. Never lose more than 1% of your total NAV on any trade. And put your bracket orders in, and either you get triggered out or you get a profit triggered at your target. And that's the only way to do it. The safe way, the emotional less way, unless you want to trade for emotions, for adrenaline, like extreme sport or a casino guy that doesn't have money or risk management and just goes all in. Depends what you want. I want to be able to sleep at night and keep my stress level to a minimum. All right, so what happened after that would have been triggered out. And the bottom seems to have been starting to be formed around here. And I'm trying to look for, there's always some launching patterns. You could have played here. Here seems to be some more. All right. Lot of noise. And let's just move to go back to my, just the past 10 years, and this will permit me to zoom back. Right now, we seem to have some resistance, some support, around the 11. And even lower right here. Yeah, about 11, that's our support. And the resistance, we used to have a lot of resistance. Wow, this thing is really... So there's always intermediate patterns, bigger patterns encompassing smaller patterns. I always give more value to the bigger patterns always have bigger targets, bigger possible targets, and the smaller launching patterns have more probable closer targets to be reached. This type of pattern I would have liked to see it on playing out on this resistance line, and if that breaks out, that small pattern gives me an intermediate target, let's say around here, and after that bigger target, that bigger pattern, let me get an arrow in here, would give me a further eventual target here. So right now there's absolutely nothing happening with the VIX and nothing playable. You could, let me zoom in, there you go, remove those candles, there you go. You could actually play maybe if there's a breakout here, add it to the breakout line for target right here. Both of my lines are messy this morning. And after that, probably more candles moving up and down, and eventually maybe coming to test this important resistance line at 17. And the more interesting move would probably be playing that bigger pattern here all the way to the 25.5 area. Not much to do. I'm going to just put alerts. It happens a whole bunch of times where I just look at charts and it's in no man's land. I don't feel like I just look at it and see how the chart is, how it's morphed, and gain experience from just observing it and going through my framework, thinking things out. And it's a process, right? You rinse and repeat the process. That's why professional boxers have 100 or 200 amateur matches. They all know the basics. They all learn the jab. They all learn the uppercut, the straight, the hook, the movement. But they need to practice to be able to see it different, see how their opponent moves, and just get better at it. Get more relaxed and just do a better job of what they're doing. Continue doing those. And what they probably learn over the days is, the years, is sometimes young boxers are flashy. They do low probable, risky moves. Flashy, big knockout, big uppercut from far out. But I've noticed that successful boxers stay champions long time. Their game plan goes back down to high probability moves like jab, over and over, win rounds. Right hand, still less probable, but still high probable. They don't risk anything that much. And I think that same mentality of champions could be applied to traders. Don't go for the flashy long target moves, for the big bucks, the greed right away. Go on what's solid, on well drawn out patterns, and A++ setups. Can't go wrong with that. And while I'm talking, I should have been doing my last alert, and that is it. There's one more alert I could do, is underneath here in case there's a bearish breakdown below that. So it's been pretty stable, the VIX, for the past year, but you never know. When it decides to spike, it seems to be erratic. Keep an eye on that, put your alerts, and come back to that some other time. All right, thank you very much, guys. See ya.